Good afternoon and welcome to the Eastside Recovery Hub Financial Webinar Series hosted by One Redmond. My name is Christina Hudson and I am the Executive Director. I will also be your moderator for today. All of our Eastside cities and chambers are partnered together to give you the highest level of support to the local business community. And I want to thank all these partners, our Eastside cities and chambers, for the work that they are doing. Please note, if you need to see an advisor for technical assistance, please reach out to One Redmond, your local chambers or cities, or you can also go to the new restartup425.org website to sign up and someone will contact you. And before I go, I just want to make sure we don't have the slide share, at least I can't see it. So we're going to go ahead and get the slide deck up on the screen here momentarily. So today's webinar is part of our financial resources webinar, and the focus is tax relief and incentives available to businesses during COVID-19. As you may know, applications for the disaster loans and the payment protection programs are still open. The SBA is accepting the economic injury disaster loan applications from agriculture businesses at this time as they continue to process the general business applications that are currently in the queue. We encourage you to apply for these loans. Please note, especially the PPP, please note our recorded webinars give an excellent overview of how to go through the application process. And remember to utilize the SBA's online tool for identifying an eligible lender for these programs. If you are having trouble finding a lender, please review the online application opportunities now that are available via Intuit QuickBooks, Kabbage, PayPal, and Square. Recordings and resources, including how to fill out all these applications, are available on the Eastside Recovery Hub webinar page at eastsiderecoveryhub.com. So again, today we are here to talk about the COVID-19 related federal tax relief measures that could result in larger tax refunds. Before we begin, I want to cover a few housekeeping notes. If you need technical help during the webinar, please use the chat box. We have staff on hand to try and help with any issues you may be experiencing. We also have links to pertinent documents in the chat box that you will be able to access and download. The tools we have here will also be on our website, the eastsiderecoveryhub.com. If you have any questions for the speakers, please use the Q&A box. We will do our best to get as many questions answered as possible. And this webinar is also being recorded. We will send out a link as soon as it's ready. We know that many business owners are seeking guidance, and we are hoping to help you navigate through all this information that we know today. However, it is still a dynamic process, and as of right now, all the content you will hear on this webinar is accurate. So let's get going with our program. Today we have Renee Schaefer, Principal from Clark Newber. Renee has more than 30 years of experience working with both private and public companies, and today she is here to talk with us. And now I'd like to turn it over to Renee.
Thanks, Kristen. So today we're going to cover, Congress has given us a host of tax incentives to help small and medium-sized businesses, and I'm going to just touch on the major ones. We're going to go through the different acts that they put together. So the Families First Coronavirus Response Act, the CARES Act, and then additional guidance, because obviously these provisions came out very quickly. So IRS, SBA, everybody's giving us tons of guidance on a daily basis. So what I'm going to do is I'm going to go through the major incentives and kind of give you commentary of how these incentives can help your business. We have resources that will be sent out apparently on a follow-up email that will direct you to articles we have written and resources. And we will have questions at the end. So the first incentive that came out with the Families First Coronavirus Response Act was a requirement to pay sick and family medical leave. This requires 500 employees to pay up to 10 work days of qualified family leave or sick leave at full salary after an optional 10 unpaid day or paid leave period. So what this does is you have to pay your employees if they're out sick or they're being quarantined and there's a medical reason for the quarantine. So it does not cover stay-at-home orders. It only covers if they are sick or they suspect they might be sick, and there's documentation. It also covers if you're taking care of somebody who has COVID-19. So that could be other people in your household, but it also includes if you're taking care of your children or the employees taking care of their children because they can't go to school or they can't go to childcare. All right, so important items. The next thing in this provision is it allows a payroll tax credit for wages and health insurance paid from April 1st to the end of the year for employees that have COVID or care for others with COVID. This credit is 100% of qualified regular wages paid, which is capped at $511 a day for a total of $5,110 per employee for paid sick leave, or $200 a day, $2,000 total, at 2/3 of wages paid to those who care for others, for example, like their children, plus the cost of their health insurance. So this credit can be a really nice benefit to employers. It's encouraging you to take care of your employees if they are sick, or how the sickness is applying to their children or their families. The credit is allowed against the employer and employee FICA tax, Medicare tax, and federal withholding tax. And like I said, it covers people who have to stay home to take care of their children if the schools and childcare facilities were closed. And there's also an additional childcare leave refundable credit for paying 2/3 of the regular wages, capped at $200 per day. So that's in addition to the first 10 weeks. Now, this is a payroll tax credit, so it offsets the payroll taxes that you would be submitting to the IRS. And the important thing here to note is it will carry forward, but it is a refundable credit. And if you want to get the money back ahead of time, there's a form 7200 where you can get an advance refund for for this credit. My experience is a lot of clients have not been using this credit because they haven't had a lot of people sick with COVID-19. But I think there's a real advantage here because a lot of employees are out to take care of their children. So that's where I see this credit being applicable more so. Then with the CARES Act, we got the employee retention credit. This is another payroll tax credit, and it's against the employer's FICA tax paid for up to 50% of qualified wages and health insurance. And it's through March 13th through the end of the year. This payroll tax credit is a maximum of $5,000, 50% of $10,000 of wages per employee. And again, it's refundable, and it can be claimed against all the other payroll taxes. If you want the money back quicker, or you think that you're going to have a large credit, again, you could, this IRS form 7200, you can request an advance payment. It also allows you to retain the employee or the employee and employer taxes that you would normally remit, as long as you believe that you will have a credit to offset this. This is only eligible for employers if they have a 2020 quarter where they had fully or partially suspended operations due to the government limiting commerce, travel, or group meetings due to COVID-19. A good example here would be like restaurants. Their eat-in has been discontinued, but their takeout is still going forward. Or, and this is the thing we see more with clients, is their gross receipts for the quarter are less than 50% of gross receipts for the same calendar quarter for the prior year, okay? And you will claim this as many quarters as it's down, as long as your gross receipts are down, until the gross receipts are greater than 80% of the same quarter. So you can claim this for multiple quarters. It's important to note that if you have 100 full-time employees or less, all the wages paid will qualify for this credit. But if you're over 100 employees, only wages paid to employees not providing services will qualify. Now, the tricky part here is the recipients of the PPP loans are not eligible for this credit. If your business is down dramatically, this benefit could be a larger benefit to you than the PPP loans. And it's something to evaluate when you're trying to figure out if you should pay back that PPP loan by May 14th, because you might be eligible for these credits, and they could be significant. The IRS just recently announced that this credit can also be claimed for an employee who is not being paid and isn't working, but they're still receiving the employer-provided health insurance. This credit, if you have over 500 employees, you still qualify for this credit, so you don't have the same limitations as the PPP loan program. This credit is where we see our clients trying to evaluate which is more valuable to them, the PPP loan or this employee retention credit. And it's just a function of, do you meet the criteria and how large your payroll tax benefits are. The next tax incentive we got out of the PPP program was this deferral of employer payroll taxes. So this is where employers and self-employed taxpayers of 50% can delay the payment of their employer portion of the FICA taxes from March 27th through the end of the year. Now, they're not waiving it, they're saying that it's deferred, so you'll have to pay 50% of the payroll taxes you deferred by 12/31/2021 and 50% by the end of 2022. The trick here is going to be taking care or keeping track of how much payroll taxes you deferred, because you certainly don't want to be late on this. And just remember, payroll taxes don't get waived in bankruptcy. So it is a bit of a tricky determination to see if you want to do this. You are eligible to do this deferral for the employer taxes to the date of the decision by your lender to forgive your PPP loan. So you could take this for probably a couple of more months, because let's say your 8-week period ends July 15th. You have to submit the forgiveness within a certain period of time, and then the lender has a certain period of time to determine the forgiveness. It's up till the date of the forgiveness that you can take this payroll tax deferral, and then it stops. So let's say we had 10,000 of payroll taxes that were deferred up to that date. 5,000 would be due at the end of 2021, and 5,000 would be due at the end of 2022. So this is just another little additional added benefit to try to help employers with their cash flow. I haven't seen a lot of clients taking advantage of this yet, but I think the plan is that they might start, especially with cash starting to dry up. A really significant tax incentive that we received in the CARES Act was this 5-year carryback of net operating losses. So for losses that were from 18 through 2020, this new provision is going to allow us to carry back operating losses 5 years. Under the TICJA, the 2017 tax law change, nobody could carry back any losses. So this is a significant benefit for C corporations and individuals. And the ability to go back 5 years to get a refund of taxes paid usually at higher rates. I mean, you're going back to 2013 and 14. I have a number of clients right now that we will be filing carryback claims, and we're talking hundreds of thousands of dollars. The great thing with these carryback claims is the IRS will usually issue the refund within 90 days of filing the lost carryback claim if you use Form 1045 or 1139. 1045 is for individuals, and Form 1139 is for C corporations. You need to file these within 1 year of the loss year. So for example, for 2019 right now, we have till the end of 20 to carry that loss back. The IRS just recently announced that you can fax these forms to the IRS to get them processed quicker. To carry back a 2018 loss, because normally you have to file those forms within 1 year of the loss year, the IRS came out and said that they will accept forms 1045 and 1139 if on those forms if they're filed by June 30th. If you miss that cutoff, you can still carry back the loss, but you will have to do an amended return. An amended return it takes more time to do it, certainly, but the bigger problem is the IRS most likely is not going to issue the refund within that 90-day period. So your advantage really is to try to, if you have a loss from 18, to file those carryback claims as quickly as possible. Choose to waive carryback of the loss because you've probably already filed your 18 and your 19 returns. The IRS has come out and said that if you're going to elect to carry forward the loss, you need to include an election with your tax return filed for the first tax year ending after March 27th of 2020. That means on your next tax return, you can make the election to do the carryback. You don't have to go back and refile 18 or 19's tax return. One of the other provisions in this incentive is that under the old, under our tax law that changed at the end of 17, it was limiting losses coming forward to 80% of the taxable income for the carry forward year. This new incentive has waived that 80% limitation for years 2018, 19, and 20. For tax years starting in 2021 and after, losses carried forward prior to 18 will have no limitation, and losses occurred in 18 and after will still have that 80% limit. What we've been seeing here is clients, we're projecting out when we can use those losses if we're going to carry them forward and see what will give us our best tax benefit. Now remember, when we're carrying back losses to 2013, 14 through 17, we had much higher tax rates. C corporations were at 35%. Today they're at 21%. So when we carry back losses net that are incurred in 18, 19, or 20 back to those old years, we're looking at significant refunds. Our individual tax rates were higher too, not as much, but it's the value to get the taxes paid previously is a much higher benefit for most businesses to claim that carryback election right away to the five years. You do have to carry back to the earliest year first, and then it goes. So if we were carrying back 19, we'd go back to 14 first, then 15, 16, 17. This is a really nice benefit for companies that are already in a loss position. You do want to think about if you can create a tax loss. And when I say that there's two different ways you can do that. If you haven't claimed bonus depreciation, you still can claim bonus depreciation, or there's a possibility you might be able to change your accounting tax method for tax purposes. So if you use accrual, you might be able to switch it to cash and create a larger loss to free up some of those nice tax dollars for the company. The CARES Act also included a correction that certainly in the tax area we were hoping for, which affects a lot of our clients. There's something called qualified improvement property. With the tax law from 2017, prior to that, it was considered 15-year property rather than 39-year property, and it was eligible for bonus depreciation. With the tax law change in 17, qualified improvement property went back to 39-year, and you could not take bonus depreciation. you could only take Section 179. So if a business couldn't take Section 179, they couldn't write off this big significant asset. What is qualified improvement property? It's defined as any improvement to the interior portion of a commercial building if the improvement is placed in service after the building is first placed in service. So a brand new building, it's not going to work for. But you know what? If you moved into a building in 2018 or 19 as a tenant, and it was 3 months after the building opened up, you could write off all those leasehold improvements and create a nice loss, or get you back some tax money. It does not include the enlargement of the building, or an elevator or escalator or any structural frame building. So if you filed your 18 and 19 returns already and you had a large office remodel or you moved into a new building, you might want to look and see if it makes sense to amend your returns and take advantage of these write-offs. If you choose that you don't want to go back and amend the returns, but you still want to take advantage of this change, you can elect to file Form 3115, which is a change of accounting method, to take advantage of this correction in your most recent tax return. So you could do it in the 19 return or 20 return. You can also use this in conjunction with your net operating loss carryback claims. There's a host of other tax incentives. I just tried to cover the major ones, but here are some of the smaller ones. Starting with the tax law change in 2017, business interest was going to get limited for businesses that had more than 26 million of gross receipts. Under the CARES Act, they changed this. So for 2018 and 19, the business interest limitation was increased from 30% to 50% of taxable income, plus interest, amortization, and depreciation. We've only seen this apply to a couple clients in the past anyway, but if they were if your business was limited on the interest deduction, there might be an amended return opportunity here to increase a larger deduction of your interest expense. For 2020, businesses can also elect to use the 2019 taxable income limit. The advantage here is Congress is thinking that there might be losses or the income might be down in 2020. So they're trying to allow you to be able to take a larger interest deduction. For partnerships, you can't go back with partnerships. It only applies for 2020 tax years. And again, this business interest limitation is really only for businesses that have more than 26 million in gross receipts. The CARES Act also increased the charitable contribution limitation. So for C corporations, for 2020, the corporation used to be limited to 10% of its taxable income for charitable contributions. And now under the CARES Act, it's been increased for 2020 to 25% of taxable income. Also, if you have a business that you can contribute food inventory, it's increased from 15% to 25% of taxable income. I've had a number of clients taking advantage of donating excess food inventory to charities. The CARES Act also allowed, under the 2017 tax law, there was a corporate minimum tax credit. You could take 50% in 18 and then the remaining over a period of time. Under the CARES Act, it's now allowed 100% acceleration of these EMT credit carry forwards, and you can claim them whatever's remaining in 19, or you can elect to claim them all in 2018 if you amend a return. Most clients are not electing to claim them in 2018. They're actually going to claim them on the 19 returns because we're getting close to filing them. But if you don't think you're going to file your 19 return for a while, you might want to elect or go back and amend your 18 return to claim them. I wanted to touch base on the CARES Act. They talk about the PPP loan forgiveness. Right now, loan forgiveness income is not taxable income. But there was a question of what would happen with the expenses associated with the forgiveness income. The IRS came out with, I believe it was last week, that they are saying that any expenses associated with the forgiveness of taxable income is not deductible for now. So there's a no tax benefit. It's a wash. You know, you're not picking up the taxable income, but you're not picking up those expenses associated with it. Now, Congress has come out and said that was not the intent of the law. And so hopefully under our next tax law act, they're talking about specifically putting in there that the expenses associated with the forgiveness will be deductible. For right now, though, they are not deductible. I wanted to mention, because everything is changing so rapidly, last week for the employee retention credit, in the draft bill at the House, they're talking about expanding that retention credit to apply for more, so more businesses could apply for that. So even if you're getting a PPP loan, they would like to make the employers eligible for the retention credit. It will also, they're looking at increasing the credit percentage, the credit maximum amount. So everything is changing very rapidly here. The idea would be to touch base with your accountant and see what you can take advantage of today, how your accountant can get more of those taxes back to you today to help with your cash flow. There's also quick refunds. If you're a C corporation and you paid in tax for 19 and you know there's a loss already, you can get those back within 30 days without filing a tax return. You just have to file a specific form. So there is some strategy in claiming these refunds. Again, having a good solid conversation with your tax accountant to figure out what's going to help you quickly with the business to get the maximum amount of money into the business's hand right now when we really need it. Again, we've provided, or links will be sent to you on some of the articles that we have written about these different tax incentives, as well as our COVID-19 information resources page, which is available to everyone. So I went through that pretty quick. We're going to have a lot of time for some questions here. Kristen or Margot?
Yes, thank you, Renee. And I want to apologize to everyone for our technical issues we're experiencing with the visual part of our presentation. We will make sure to get a full copy to you when we send out the video as well. So at this point, we are going to go begin the Q&A portion of the program, and I'm going to turn it over to Margot to ask the first question.
So yes, quick question. Does the 5-year carryback claims apply to LLCs or just C Corps?
So LLCs that are taxed as partnerships, the losses would flow through to the partners, and the partners would be eligible for the 5-year carryback. The reason I said C corporations is because C corporations pay tax, LLCs don't. But LLCs, if they're electing to be treated as a C Corp, they would be able to carry back the loss. But that's not very common, by the way.
All right, and then we have some questions about the PPP loan. So our business is still on mandatory shutdown. The 8 weeks for PPP will expire on June 18th. How do we use it for forgiveness? Any chance the date of use will be changed when the business is allowed to open? And I know we're waiting for clarification, but any yeah.
Well, just remember that the forgiveness is based on your wages paid. And if everybody's furloughed, obviously you don't have any wages paid. If you are continuing to pay your employees, obviously the forgiveness will qualify for that. And one of the important things that I've been talking to my clients about is the head count. So you have to look at the head count before and the head count after, because you're going to have a pro rata reduction if you don't maintain the head count, which is really important. But you know, we're hearing all kinds of exciting things on the PPP loan forgiveness, and they're issuing frequently asked questions every day. If you haven't been paying your employees, I have not heard that yet. I've only heard that the date, it should be the 8 weeks from when your loan was funded.
And
that's your 8-week period.
And we are hoping to hear, I mean, we believe that Treasury is going to release some additional guidelines, don't you? Do you think, Renee, or?
Yeah, they're doing it every day. Some of those items have to be changed by Congress, and I'm just not sure if that's one of them or not, because the SBA has broad definition of what's going to qualify, and they've been trying to issue their guidance through the frequently asked questions. The IRS isn't really involved in that. They're only involved in the forgiveness taxable income, which was in the act. They have the direction to decide if the expenses are going to be deductible, the expenses related to forgiveness, because there is a code section that allows them to do that. But if Congress comes back and says, okay, well, we're going to let you deduct the expenses as well, which is kind of double dipping, which would be really cool for taxpayers, that's going to have to come through Congress, by the way.
Here's another question. Can you define headcount? And I'm sorry, this is all leaning towards the PPP, but can you define headcount in PPP? Is it FTE or literal number of employees?
I'm sorry, that I haven't gotten that deep into the question, into what's going to qualify for forgiveness. I don't know if someone on your team, Margot, knows the answer to that question.
We are working as soon as our understanding was that there were going to be some additional definition around the forgivable amount for the PPP. And so as soon as that's available, we are planning on doing another webinar specifically addressing the PPP loans. So that's just for everyone as a whole.
Margot, I do want to mention though, last week, I think it was last week, they came out with the frequently asked question, because I've had this with clients that they say, well, what if we try to hire back people by June 30th? Excuse me, and we can't get them back because they're making so much on unemployment. There was an interim financial question, frequently asked question that came out that if you made a good faith written offer to rehire and the employee rejected that offer and it's documented, that person still counts in your account. So you're not going to be hurt by that. But they did emphasize that if an employee rejects an offer of reemployment, that really forfeits their eligibility for continued unemployment compensation. When I mentioned this to a client yesterday, and they're in the restaurant industry, they said that's all well and good, but these are customer-facing employees. You don't want them to be disgruntled because you made them come back to work early. So they're really caught in a rock and a hard place on deciding if they're going to make these offers just to get their forgiveness amount up.
Renee, with things changing at the federal level, when should businesses really complete and file their taxes?
Well, it depends on your situation, because if you're already in a loss for 19, you would most likely want to file that as quickly as possible so you can do the carryback claim and get the taxes back. I'm not sure why you would wait to file taxes right now unless you think one of these things is really going to benefit you. I mean, our first credits are payroll tax credits. They're not income tax credits. So I would think that, that's real money relief to you right away. I don't think that they're going to go back and change items for 19 and 18. They've already done that, and I'm not hearing that those are items that they're thinking of changing, but they're trying to expand their other programs, right? So they're trying to expand the retention credit. They're trying to give more broader applicability to PPP loans, things like that. So I'm encouraging clients to file their 19 returns especially if there's a loss incentive. The other idea is to get your tax returns prepared and hold and not file them right away. But I think if you push off tax preparation right now to July or August, I think you're going to have a real problem getting the work done with a lot of accounting firms, because obviously all the individual returns have been kind of pushed, or people have slowed down getting their information in. So accounting firms are going to be really busy this summer, I think. Excuse me, in the tax preparation area. If you haven't filed for 19, at least get the preparation process started. And if you have a loss, boy, I'd be filing it right away to do your carryback claim.
What are some ways you're seeing your employee? I mean, you worked with a lot of clients. What are they, of the things today, which ones have been most important to them?
I think everybody's focused on those PPP loans, but now everyone's kind of taking a pause, especially the clients that received more than $2 million, because the SBA's come out or Mnuchin's come out and said they're going to audit them. Well, that is a problem, isn't it? They're trying to re-examine, can they justify that they needed it to maintain the business and their liquidity. I think clients are taking a real serious look at that. I don't see as many clients taking advantage of the Family Medical and Sick Leave Act. I haven't heard a lot of that. The questions around that have been really more about caring for the children. And the retention credit, clients who didn't qualify for the PPP loans for whatever reason, they're looking at those retention credits. But we haven't seen that they've been able to say, hey, I'm 50% down on my business over last year. That's a really hard mark to meet. Now, will it happen in the next month or two? Yes. But I didn't see a lot of clients that had that dramatic change. And I don't have a lot of clients in the restaurant industry. But most businesses that I've been talking to, probably 2/3 have been able to maintain their revenue and expenses, but their pipeline is drying up. And so they're thinking that June and July are going to be really hard months for them because they don't have anything on their backlog. The NOL carryback claims, like I said, I mean, if you're in that situation or you can create a loss, I think that's a huge benefit for you right now, and to get those returns done and carryback claims. I got 3 or 4 that we're working on right now because they want the money back as soon as possible.
Got it. And what any additional guidance for folks on the PPP right now? Is it for instance, how do you make your owners pay forgivable? Is that something that can be done under PPP? You have additional insight on that?
Well, owners compensation qualifies for the PPP up to that 100,000. So it's prorated. So I think it's like 15,385 or something during that 8-week period, which is basically 100,000 annualized for that short period. So business owners still qualify for that forgiveness.
So you can include that under the payroll.
Yeah.
Okay.
And I think you just have to be careful. I've had the question from a couple people, can we pay bonuses, right, to get that reimbursement up? I think that's a tricky area. I think if you're in the habit of doing monthly or quarterly bonuses and you can document it, that it's part of your business model, I think that's fine. I had a client that waived pay increases March 1st, so they wanted to do some retroactive pay. I think especially if that's documented, that would be part of their normal business operations, that's fine. But you don't want, they always say pigs get slaughtered, right? I mean, it's a fine line with maximizing your loan forgiveness. So if you're paying anything out of the ordinary, you really need to make sure that you have documentation that's part of your operating business. But to just pay bonuses to pay bonuses, I think is a mistake. And they've already come out that said you shouldn't be doing any prepayments. There is one thing that people seem to miss, because obviously the health insurance is part of the forgiveness, but also the pension plan contributions. So if you're doing your match, certainly make sure you're doing your match on a timely basis during that 8-week period. So those are the things we're trying to do to maximize. But you need to be careful what you think is going to qualify forgiveness. I would recommend strongly talking to your lenders, because the lenders are the ones that are going to be making the decision on the forgiveness. And there's still a lot of leeway on the interpretation of these rules.
Okay. For the economic injury disaster loans, have your clients received them, and do you have any of them received the grants, the forgivable portion of that?
I haven't seen a lot of that at all.
Okay. And I understand that those are still being reviewed. So one more question. With the PPP, are retirement contributions accrued or the actual amount paid?
It's my understanding it's the amount paid during that period. So if it's a normal accrual, maybe you're going to pay it earlier, as long as you can attribute it to those wages that were paid during that period. But everything I've read, it has to be paid during that period. Margot, I don't know if there's people from your group that have any additional insight on that.
Again, I think we're going to have, as soon as we have more information, we will be sharing that. Does pension include 401k safe harbor for forgiveness?
Yes.
It does.
The floor portion, yep. Mm-hmm.
Okay.
Again, attributable to those wages paid during that period. You know, so you want the direct link. It's not, it can't just be, oh yeah, I've decided I'm going to do this.
Great. I think we've actually covered all of the questions that we had. So,
All right. Well, thank you, Renee, for speaking with us today, and thank you, Margot, for fielding all the questions. Renee, we very much appreciate your time. And again, I would like to thank all our partners on the East Side who are working hard to support the business community during this pandemic. Again, I want to thank you all here on the webinar for your participation. Again, we will be sending out a follow-up email with a link to the recordings of this webinar, and we'll definitely be sending the presentation as well, because we know we had some technical issues there. And if you have any questions, please feel free to reach out. For key resources, weekly webinars, and grant opportunities, you can go to eastsiderecoveryhub.com. And you'll find quite a bit of information there as well. Thank you again, and please stay safe and stay healthy.